Okay. Today is the last day, the last episode of Market ObservAnalysis. And before we bid farewell to Nadex and move on to a new platform, I wanted to take this time to do what I was hoping to do at a later point, but I figured that we can use this data to maximize the value of the documentation that I've been building over the past roughly 2 years. Found out by surprise that Nadex was going to be retired in 2 days, actually. January won't even be accessible, but in 2 days we won't even be able to open accounts or anything like that. So back in 2021, Nadex was bought out by Crypto.com, and they had stayed quiet for years until a few weeks back. Now, the platform that we're going to be using is Crypto.com, and I've been studying the markets on Crypto.com and trying to figure out how I can still show the demonstrations through there, because all they have is mobile trading right now for binary options. And so that's obviously going to change the way that I do things. But one thing that I did recognize on that platform is that that everything that is relevant to the skill set is the same. There are a lot of changes. So what I'm going to be focused on today, as we review the demonstrations that led up to where I am now in this account, I'm going to be focused on a few main key things. So let's switch up the mood a little bit. Okay. Actually, you know what? Let's switch it up even again. Yeah. All right, so let's get started. Right now, the live market's not really relevant to what we're doing, so this is going to be probably the best episode that I've shot. So let me bring up all of my files, and we're going to start from the very beginning. From the very beginning. We don't need that. Okay. Here it is. So we started this project in February. Was it February of 2024? So it's been almost 2 years. All right, let's take a look. Okay, hold on. Give me 1 second before we get started. Let me close this door. Get rid of the background noise. Okay, so we started this account out with $107. That's a weird number. $107. Okay. Let's start. All right, so what I want you to pay close attention to is the range of positioning. Right here at the top of the range. 3. Okay, and then you want to look at the pricing too. So if you look here where my mouse is, the range of position in all of these candles are very small and tight. And you'll notice this throughout the series. And after I've confirmed that that range of positioning is small and tight, I'm looking at the progression of the price. And that's this right here, this 23.75, 23.50, 24. And so as the position is moving away from the strike, I'm looking for that price to also progressively or incrementally move away, move toward the 0 on a sell and move toward 100 or 99 on a buy. And that's exactly what it's doing. Incrementally, step by step, it's moving down and we're filled in. So this is the first trade that started this whole series. And this is all that you're going to need to really have a firm grasp on when you move on to the new platform is the new platform, crypto.com, as you'll see in the next few weeks when I figure out how to show it on there, is that the market is just moving within one zone on one side of a strike, and the price is incrementally moving away in one direction without hopping around too much. So that's number one. Let's take a look at the second one. That was one. October 2023. Oh wait, I have a better idea. This is more orderly. Okay. All right, so we had one. Here we go. Here's number two. All right, so we're starting at about a minute and a half here. You can see the range of positioning for all of the candles. Now that's another thing. On the new platform, you won't be able to see those candles, but we actually have pretty aggressive incremental movement away from the price. Let's start that back. We're at 688 on a 690 strike. 21, 14, 5. That is that pricing, that progression of pricing is a bit aggressive actually. So it's not as incremental as I'd like in hindsight, but let's see. And okay, there we go. This right here is why when you see the price skip in one direction, oftentimes it'll come back in the other direction. And in those scenarios, the market could overcorrect and when it comes back. In this case, the market's range of positioning kept me safe. It had established itself in this range of positioning that was inside of this sell zone. It hadn't violated this sell zone by touching the strike. So that's what protected my trade. But if I were to make a critique on this trade, that progression of pricing, that one was a bit too, that was not as incremental as I needed it to be. So I'm giving myself some critiques here too. Range of position was solid though. All right, that was number 2. Let's take a look at number 3. All right, we can see right off the bat that the range of positioning is inside of that zone. It doesn't touch the strike, and we also see pricing on the sell. Let's push play. Okay, so we have 2 minutes on this one. And you'll notice that videos on the crypto.com app, I'll probably be starting them at 2 minutes instead of a minute and a half more often, until I get like real used to it. But the price is moving incrementally. So we got 20, 17, 14, 15, 13, 14, floating 9, 10, 10, 8, 8, 12. So keeping a fairly tight range of movement. What I'm waiting for is the market to confirm. There's the confirmation, and I'm in. I was in at 1 minute and 22. Good incrementality, and their confirmation was there too. And that range of position was solid also. So everything you needed to be there was there. So this is a solid product, solid income building product. We can kind of fast forward to get it to the end. We don't really need to see all the extra stuff. All right, that was number 3. Let's take a look at number 4. All right, once again, before we even push play, we can see that the market from this point here, and this is the difference between this, and I hope they make the change someday, but you won't be able to see candles on the new platform. But there is a way to see the range of positioning. So we'll discuss that when we get there. But in this case, we see that the range of positioning had established itself from this candle onward. And what you're looking at on this, before I even push play, is that the floor of this position had established itself at 394, which is 4 micropips above this strike. So it established itself inside of the buy position, inside of one zone, without stepping outside of the zone. Let's push play. All right, so we're looking at this market's pricing incrementally move up, and it's giving us plenty of time. So what we're waiting for, once again, from that 394 to a 395, and that'll confirm the position. The floor is at 4. Now it's at 3. The market's pricing is still there. Let's see if we give it a chance to confirm at 9.5 off of the floor. Pricing is still incrementally moving within a tight range. Did I take this one? Why does it say that I took this one? Oh, you know what? That was the binary leading up to the trade. This is the trade. Okay, so market establishes itself. It looks like it established itself at 1. That's the floor. We see nice incremental movement of the price. We're looking for Did we get a confirmation? Had to have gotten a confirmation because I wouldn't have taken it. Okay, here we go. There's the confirmation right there. Go back. We see the market at 3 right now, showing us incremental movement in the pricing. So the market's moving slow inside of one position, which is the buy position. It confirms at a minute and 9 seconds. And now the price is starting to kind of float away from us. And that's why I took the trade. Okay. So I'm going to fast forward it. Get filled. And it closes out beautifully. That's number 4. At 179 as the balance. Number 5 up next. All right, let's fast forward this a little bit. I don't think that this one. Let's start at 2 minutes. Okay, so at 2 minutes, this is where we're seeing the incrementality. Visually, you can see the market moving inside of the buy zone. It's high inside of the buy zone. And so with the market being stable and high inside of the buy zone, the pricing is corresponding with the probability of it staying where it's at. So we see that incrementality very early inside of this entry window. And at this point, all I'm waiting for is for the market to confirm from that 114 to 115. And I think my mindset on this one was to see if I'd get filled, because the pricing shows that it was already kind of out of range of what we would need to be filled at. So in order for me to get filled, I would need the market to actually come back down, or for somebody to bet on the market going down. So this one, from a quality standard, I wouldn't say that I would normally go for something like this, but from a pure market stability standpoint, this one was solid. And so now the market's coming back and showing some liquidity, which is not something that you normally want to see. But for the sake of me getting filled, it worked in my favor. But you don't normally want to put some money on these types of setups here, because of what can happen, and actually what did happen here. You can see that the position at this point, at 11 seconds left, threatened my entire trade. So that's why I don't typically mess with these types of products here that are already kind of high in the buy zone and already outside of our threshold, because in order for them to get filled, it's kind of like catching a falling knife. And I caught it, but I almost bled. So careful with that one. Yeah, number 5 could have been it. All right, let's take a look at number 6. We got some noise in here, so let's get that noise out. I don't know what the noise is. And let's mute it. There we go. All right. So you see the market coming up into the buy position. And once again, let's see if we can see. So the floor is at 2. Now, if you look at what I was doing with the cursor, that's how I can tell. Let's go back. Boom, boom. I did it real fast. There it goes. I'm looking at the floor. So where the lowest point is the floor, and it's consistently 2. So I need for the market just to confirm away from the floor. There's the confirmation right there at 115, but the pricing is still showing that I have time because it's in the mid high 70s. I like to see it in the low mid 80s before I would consider pulling the trigger. So the floor is at 2. I need for it to confirm. There's the confirmation, and then there's the entry. All right, filled. Market's resting on the floor. And we can fast forward to the end because we know what happens. Bam. All right. At number 6. Okay, $215 so far. All right. Now we're on number 7. Whoops. Okay. So you kind of get the theme here. We see an established range of position inside of one zone. Inside of one zone. Between 2 strikes, but not touching either strike. In this case, we see it in a sell. We'll see that incrementality 23, 20, 22, 20, 19, 22, 19, 22, 21, 20, 18, 22, 20, 24, 18, 19. I'm looking for that 328 to go down to 327, 17, 18, 17, 16. Very good incrementality. 17, 17, 25, 21, 13. Okay, here it comes. 7, 20. It's gotta come. There you go. Bam. Usually what I've noticed, at least with this pair, the euro dollar, is that the pricing usually will lead the position. The pricing here usually leads a little bit ahead of the position. So very good incrementality. We just needed that confirmation. It came just in time before 30 seconds. 30 seconds, the window closes. All right, so that was number 7. We're at $305. Number 7. Number 8. All right, same thing. The market entered into the sell. We're looking at the way the pricing is moving. 21, 20, 26, 23, 26, 24, 21, 20, 20. Nice incrementality. 18, 14. See how that price is kind of now. Yeah, that price is boom. There's a confirmation at 1 minute and 4. I give it some more time. There we go. The first entry point was 1 minute and 4. So we can kind of fast forward it, because we already know what happens. All right, so we are at $359. Then number 7. Now we're at number 8. All right, so same deal. Oh no, this looks exactly the same as what we just did. My bad. So that was number 8. Let me go to number 9. So right before we even get into anything, we can see that the market's already established itself inside of one zone, in between this strike and in between the 1107 strike and the 1105 strike. Right now, according to the pricing, the market is favoring the buy position. Let's press play. Okay, let's see if we take a look at the floor. We're at 6 above, 82, 80, 78, 81, 79, 81, 81, 81, 85, 84, 84, 84, 87, 80, confirmation at 59. Touching the floor at 54. That's where the floor is. That's what this candle is. Showing the floor. Anything below that would be a break in the floor. But it's on the floor right now. 54 is where the floor is at. And kind of fast forward it. All right. Moving along. Halfway to where we are right now. And mind you, this is 2 years. It's taken roughly, well, a little bit less than 2 years to get 18 products. So think about that. But in the same sense, if you look at my account now, this is where we are. And I was taking an extremely slow pace, extremely slow pace. Not for my, I'm doing it for a few reasons. Number one, so that I don't mess up. And number two, to ensure the quality of these demonstrations. All right, so number 10. All right, so once again, we're looking for the floor. 32 seems to be the floor. 31. 31 is the floor. So all of these candles are inside of the buy position. I'm looking for the market to show me some incremental progression upward. We're 3 above, and the pricing currently is at 67, 68, 79, 79, 80, 80, 82, 80, 83, 83, 83. We need the confirmation from 34 to 35. 84, 82, 82, 83, 85, 87, 88, 88, 88, 87, 89, 89, 91, 86, 86, 86, 90, 94, 94. Confirmation at 31 seconds. Been a lot of those that it didn't confirm the position, and I'd just be sitting there, just nothing happened. But you got to get that confirmation. It's important, because what you don't see is a lot of these that I don't record and keep and keep in my file. But you'll have some that set up this way. They don't confirm, the price looks good, and then all of a sudden the position shifts to another position. So you got to make sure that all these things line up the way that that you hear me explaining it. All right, number 10. Number 11. All right, we're at 521 bucks. And I just quickly looked at the floor. I think it was at 2, shown here. Yep. All right, 53. We're at 88, 89. When did we get there? 67, 84, 83, 88, 88, 88, 89, 89, 89. We need 4. Okay, there is the confirmation. 2 confirmations. Now I don't know what I'm waiting for at this point. But I'm being ultra cautious, apparently. Yeah, this product, there was a very delayed entry. So delayed that I brought up the ticket to just cancel the order because I'm like, well, it's too late. Somebody took it. All right, we're at 629. All right, let's take a look at number 12. Same story. The market established itself, showed its floor. We're looking for that incrementality, that progression of price. I call it the ROP pop, that range of position and the progression of price. We see that range of position is all within the buy. And so now all we need is for that price, 86, 86, 88, 86, 89, 89, 89, 90, 93. We need the position to confirm, 91. There it is, confirmation at 49. Another thing that the new platform is different than this one is that we can't do limit orders right now. So I don't know how that's going to affect my demonstrations, but I think the timing would have to just be a little bit more precise. And so one habit that I built, kind of hardwired into myself, is waiting until after the minute mark to even consider entering. So you'll see most of these demonstrations with entries after the minute point, but I don't know if that's fully necessary. Okay, we're moving along nicely. 755. That was the 12th product. Let's take a look at number 13. Oh, let's turn that sound off. All right, let's try it again. Okay. I'm not a huge fan of this one. Did I see pricing at all? Not a big fan of this one because we don't see that pricing in that like 20 high teens range. So, not a huge fan of this one. Let's glance at the real market real fast. See if there's anything going on. Nope. Oh, pricing comes back at the last second. Okay, so 27, we just needed to confirm back away. 27, 26. Yeah, not a fan of this one. I took this one? Oh, that's why. Yeah, this one's not a good demonstration here. I didn't like that 13th one. Yeah, it worked out, but that's not a really good quality product there. Okay, let's go to 14. All right, this is another good one. We see the market establish itself from right here. It's range of position. Range of position is inside the cell. At this point, we're looking at that progression of price. 22, 22, 23, 21, 28, 26, 28, 29, 26, 25, 22, 24, 22. Let's see some teens. 21, 19. There we go. 19, 18, 20, 21, 19, 19. All we need is a confirmation from 985 to 984. 22, 16, 16, 17, 15, 14. Okay, I can understand why I entered this one. I wanted to see that right there. That confirmation down to 4, which happened at 30 seconds. That would have been the proper time, because you don't want to enter if the market goes, if it starts at 5, for example, and a buy position, then goes to 4 and comes back to 5. Well, it didn't confirm away. It just confirmed back at. So, this was a good one, but this is why we review. Number 15. Once again, range of price, range of position, all within the cell. It established itself here. And so let's see, at this point, we're looking for it to confirm the position right here. And the price would tell us that. Price is already out of the range, or excuse me, no, it's not. This is when the pricing changed. So now we're looking at twos. So this is still 22, 23, 20, 21, 27, 25, 19, 13, 6. Confirmation. So this one was excellent. This is an excellent demonstration. Had that incrementality, and we had the confirmation. And we had that rock pop, range of position, progression of price. That's exactly what you want. So this is this one you can watch back. There's a bunch of them that you can watch back. It's just that number 13. That one wasn't a good example, but the other ones so far, they were all solid. Let's check the market real fast. Even this market right here looks good. We don't have that pricing that we want. 6, 5, 5, 6, 2, 6, 5, 3, 2. So the floor is at 2. And we would need the market to confirm at 7. It's at 7, 6. But it didn't show us any incrementality in the pricing. No confirmation. So, nothing here. But I do like how the market's moving. All right. Anyway, so this one was a really good one. 15. 16. Let's take a look at 16. Oh, okay, let's get rid of the sound. All right, let's take a look. You can see me visually set up these colored rectangles to show you what the position's in. And I get even more specific with it, but let's take a look at the range of position. It's the floor is at 2. And then the progression of price, we got 84, 87, 90, 91, 90, 87, 88, 91, 87, 96, 92, 93, 98. Confirmations to come anytime now. 99, 99. Yeah, there's a confirmation. See, that's what I meant earlier when I said that the pricing typically leads the position. So you'll see a confirmation in the price before you see the confirmation in the position. And that's something that I'm working toward getting a bit more confidence with, is executing when I see that price confirm. But I've trained so much in making sure I see that the position the position confirms a way too, that I don't even know if it's realistic for me to try and execute without seeing the position move away first before clicking in. But this one's another good demonstration. We still got filled, even though the pricing didn't show us that we would. Okay. All right, we got two more. Number 17. Here we go. Floor at 2. Oh no, floor at 1. All right, let's take a look at that incrementality. $69, $73, $74, $72, $79. We needed to confirm from 612 to 613. See, pricing is leading the position once again. So this is a nuance. Bam, there I go. This is a nuance of the euro dollar. Is the price will step ahead of the position. At least that's what it's been showing me. Anything going on in the real market? Nope. $1,800. And then last but not least, all right, so at this point, I'm showing you where the floor is at that 34, where that green line is. Looking for that incrementality. 85, 84, 87, 77, 83, 79, 73, 74, 77, 75, 74, 76, 5. 76, 77, very nice incremental movement with the pricing. 89, 94, there's the 90s. Where's my confirmation? There it is. And this one, I think that I'm like, it doesn't look like it'll get filled. Right as I was getting filled, I deleted whatever remained on the order. So I left some money on the table on this one. But the good news here is that the payout for these trades is between 20 and 25% typically. And so I am in position to start demonstrating the income phase, and that's exactly what's going to take place in 2026. Is you're going to see me kind of go back and forth between taking income and then using the funds to build and reinvest. So taking some to invest and then leaving some to reinvest. And this demonstration video here is going to really allow for you to focus on the right things when you, or if you were to go onto the other platform and still use this same type of focus as it relates to recognizing stability and opportunities in the market. There are plenty other ways to trade. There are plenty other ways, but this is something that's been consistent. You can build it slow and steady. I mean, if you look at what the starting balance was versus what it is today, roughly 2 years later, that's a little bit over a 2,000% return. So you tell me what else is doing numbers like that, taking it super slow. So I'm hoping that you got something from this. I'm going to watch this back. I'm hoping that I can use this and train audibly from it, because that's really what's going to help sharpen and refine the skill. So, well, it's time. I'm going to go ahead and process my withdrawal and bid Nadex farewell. So it's been fun. Learned a lot. But now it's time to take my skill set over into another platform and really do what I came here to do. So until next time, let's keep on building. And before you know it,